Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
This is the Friday, June 11, 2021 version of the Market Plus segment. Joining us now is Sue Martin. Sue, I'm going to just say it right off the top. We're going to talk about 2 things, and they're going to be longer and different. I'll just say we're going to talk about $30 beans, and we're going to talk about the 1970s. You good with those?
Yes, I am.
Both topics that we need to address. So first, I'm going to get out a couple of the questions that those of you who submitted them via Twitter and Facebook, get a couple of those out of the way. Stay in for this discussion, please. So we're going to start with Wayne in southwest Iowa. And again, I told you we had a lot of weather questions.
Yes.
He says, with the dry northwest corn belt, do we sweep the corn bins now or save some gambling bushels if this dryness lasts through pollination?
I think since you've obviously marketed the crop, most of the crop, I would say save these bushels for gambling and take them into July. Because we've seen our market price in Brazilian Safrinha corn pollination. Wouldn't it seem feasible in this year that we would do the same thing for ours? I think we will. Now, granted, the end of the month, June 30th, crop reports, they're the biggies. The supply-demand report, half hour and it was over. Now, it's the quarterly stocks, which we'll see these numbers out of the supply-demand report fused into, and then the final acres planted. And we have very little prevent plant this year. So it's going to be, you're going to have such volatility, and you usually do anyway, but you're going to have a lot of volatility into those 2 reports.
All right, so Phil in Dresden, Ontario then is going to try to pin you down on exactly what you just talked about. Weather is the mostly defining new crop markets now, he says. What's your best call for acres on June 30? And with USDA's updated June 10 stock numbers, how might that change ending stocks for corn and soybeans moving forward? Is the evidence of demand destruction diminishing?
Some could say it is. I don't think so. But I think what happened is, first off, we've moved price so far so fast. And it took many by surprise. They never would have dreamed the market was capable of what it's done this year. But I also think that tells you just how pent up or how tightly we had coiled the rubber band for the last 8 years, 7, 8 years. And therefore, we came out swinging when we started to realize we had all this demand and supplies maybe weren't as abundant as we had thought. And so we had to keep moving on until trying in effort to maybe slow that demand down. I don't think we've really slowed the demand down. One, I think you are very tight supplied on soybeans. And so because of that, I think, we hit the pipeline supply of 120. If we're to see the number go under that, it would have to be probably in September that we would see that. So consequently, I think the market's resting, if you could call it resting. It's swinging, it's wearing people out, because along the way, there were so many disbelievers. Nobody believed the market could do this. And now all of a sudden, hey, it's sexy to be long and try to be in the market. And so now they're getting, the market's rolling and churning these people, and they're taking losses. But the bottom line is we're now looking at U.S. weather. And so now when you look at weather, you're starting to go back to a supply side of the equation. And I think that that's where we're going to have to say we need good weather. Otherwise, in beans, you can't afford to lose a bushel. And even say 0.8 of a bushel or 0.7 of a bushel, we're going to be, 155 million bushel carryout for 21, 22. That is dirt low as it is. It doesn't allow room for some vulnerability, and it tells you we have some rationing to do.
Well, it sounds like you're setting yourself up for something that was said on this program at the end of February. You're going to see more of that. I think it's possible that in 2023 we could see, and this is just what you're saying, we could see $30 beans. I think corn maybe 18, 19, and wheat goes to 42 and 45. Are you standing by those that commentary from the end of February, and why?
Very much. For one thing, if you look at the world, what's happening, and I'm kind of deviating, getting a little bit over past the 70s thing, which we'll talk about too. But if you look at this pandemic, people underestimate what it did. Take computer chips, or microchips, I mean. Microchips are used in just-in-time inventorying. You look at labor, Indonesia, Thailand, even in those countries, farmers or farm laborers are leaving, going for higher paying jobs elsewhere. So what's happening in the US isn't any different. It's happening all around the world. What does that subtly do? It lowers your production, subtly, but it happens. And we're just not right there right at this moment. So that's a kind of, you shove that out. Then you have this weather that's happening. And of course, the US weather forecast for the summer for July is expected to be quite hot. In fact, the last week of June is expected to give you a little taste of what July is going to be like, and half of August. Then you get into that last half of August and you might start picking up some showers, but September is thought to be pretty warm as well. Well, what's going to happen is your crop's coming home quickly,
Right.
but that also is a way of cutting yield. But when you look at the pent-up demand around the world, and back in the 90s, we went to this because production almost every year, or at least every even number year, was increasing appreciably. We were setting records of carryout. Okay, so the rest of the world thought, we don't have to pay up front. You know, we don't have to have reserves. We'll just buy as we need it, just in time inventorying. I think that's going away. And I think we're going back to carrying reserves. China's working on it. And, you know, I've mentioned before, we've had the great grain robbery back in the 70s, which was Russia. They, too, at that time had had a horrible weather situation. You look at China now, 23 out of 31 provinces are having flood alerts. Things just aren't perfect there. And you don't come back in 1 year in China for supplies. And corn ended the week at, what, 10.81 or something like that a bushel? Why? If it's so plentiful, why is corn that high? It's, you know, I just can't even begin to say it enough that everybody around the world needs food. You've got food shortages. Look at the migration. Even coming up into the U.S., a lot of times when they're interviewed, what do they talk about? Food. And you look at Venezuela, even had some, 10,800 some Venezuelans coming across our border because why? They don't have food. And that's not just here, it's overseas. And it's, hungry people fight.
Well, exactly. You're only a couple of meals away.
That's right.
From chaos, really.
And that's how governments get overthrown.
And that could change things. Some of the blowback from the $30 comment is that could really throw a lot of things out of whack. I'm not asking for the government to do anything, but the market would have a hard time getting to that, wouldn't it?
No. Look how easy $15, $16 beans
And how quick?
came. And how quick. And think of it this way. Going back into 1970, March of 1971, beans went from March of 1971 to July of 73, 416%. Now, I'm not thinking 400. All we have to do is roll the thing over, just double it. And look where you're at. There are many markets that have really increased prices even since the 70s. LNG has not, but it will maybe. You look at lumber. You know, who would have thought you go from 200 something up to 1,000,
Yeah.
fall back to 600, and then you go to 1,600. You know, and here's another thing, the money that's in Bitcoin. These people are used to volatility. You think they're going to sneeze at even or think twice about coming into commodities? Money coming out of the stock market. If President Biden's plan for capital gains goes through, talking a nicely increased capital gains tax, plus rolling it back for 4 years, you think that I think money's kind of leaving the stock market, even though it's holding firm. I think money's leaving as it is now. You hear of many homes that are being paid for in cash,
Right.
and not cheap.
Right, and the housing market has taken a little bit of a breather the last couple of months, but a lot of that has been on the supplies and the lumber that,
You
know.
can't
and
get them.
But I've also heard from realtors that say those who wanted a new house have gotten it, and that at some point that's not going to roll over. So I'm not an economist when it comes to the housing market. But let's go back. We've been talking about the 70s. You talk about the great grain robbery. We talk about inflation. We talk about lots of these things. They sound familiar to what we've been talking about for the last couple of years.
Well, and another thing, Paul, back in the 70s, there were some changes, fundamental changes that were taking place. Secretary Earl Butz was Secretary of Agriculture under Nixon and Ford. And President Nixon took the dollar off the gold standard, which then set it, as we were selling grain, made the dollar the currency of the globe that you pin everything to.
Right.
And that sort of laid a footing under our commodities. We had USDA wanting to get out of the grain business. We had ASC bin sites all over the Midwest and anywhere that grain was raised. And they would pay farmers and buy their grain from them and store it. Well, they decided to get away from that. So, and we had good surpluses at the time as we came into 72. But in the meantime, the Soviet Union is having horrific weather, and they needed supplies. And the Soviet Union was one country, you could see shortages. You could walk in a grocery store, it'd be one price. By the time you got to the checkout, it had jumped. It was that way, and your store shelves could be kind of bare, almost like we've seen in the pandemic for toilet paper and different
Right.
things that we had never seen before. So what happened was Russia came in, swept us out, took all of our grain, our corn especially, but took our grain. All of a sudden, we hit some issues, hyperinflation or inflation takes off, and the market zings. And speculators came in, and what did they buy? They bought soybeans and silver and sugar, the three S's that are thought to be inflationary hedges. And now you look at sugar, okay, it's an energy. It's also when you're starting to hit global economies percolating and moving back, and people have been pent up for a long time, they're going to really be, and you've got government subsidizing that's happened not only here in the U.S. but other parts of the world. That money's going to start circulating, getting spent. It's
It has a little bit, and
well-
I'll tell you what, Sue. This is a topic that we will revisit again.
oh gosh, I'm so friendly.
I'm gonna dial you back, and we'll hold you back. We'll come back and
Okay.
talk again. Thank you, Sue.
You bet.
Appreciate it. That'll do it for Market Plus. Next week, we're going to look at a dairy navigating a pandemic, and Chris Robinson will join us to break down the markets. Thank you so much for watching. We'll see you next time.